Good morning, everybody. Hope you're having a good Sunday. We're going to wait 5 minutes here. Start at noon on the dot. Make sure my volume's all good to go. Screen shifting. Think we're all set. Feel free to share where you are tuning in from. I like seeing where everybody's at. Structure here of what we're going to do. I'm going to answer a lot of people submitted questions, and I appreciate that, through Twitter and YouTube and Facebook. And so I picked out 11 of those that I'm going to go over first, and then I'll open it up and start reading the YouTube comments and interacting with you all there and answering some questions from there. But definitely appreciate the questions. It gets a little monotonous when you're just looking at charts and just answering questions. Is this a cup and handle? I like these kinds of questions because they're a lot more in-depth and require a lot more thinking. These are the kind of questions that when I meet up with ChartGuys members and have a beer, this is what we're talking about, and it's a lot more engaging. And it also helps with self-reflection. You know, when I'm asked a question and I dig deeper into my own self-subconscious, I recognize things that I wouldn't other recognize, and that is definitely beneficial. New Jersey, Alabama, Pakistan, Ireland, Kentucky, California, Asia, Atlanta, Norway. I'm always amazed when I look at the analytics of the YouTube videos, how many dozens of countries people are watching from. It's pretty wild. We had a major storm last night, so as soon as I'm done with this, it's out for flood repair. Some outside work, and it's time to plant a fall garden. And I almost did it yesterday, and those seeds would have been washed out. So that was a little procrastination being beneficial. So again, once I start getting going here in just 2 minutes, I'm not going to be reading the YouTube chat as far as answering any questions. So I will prompt. You can write out your question in advance, and then once I say, okay, now I'm ready for the questions, that's when I'm going to start reading the YouTube chat and interacting with you all there. And I'll also link back. The last time I did a Q&A like this was the start of 2020. And I honestly don't even remember any of the questions or what we talked about, but I'll link that in the comments of this video as well. And perhaps there'll be some differences in similar questions now that's a year and a half later. Alaska. I'll go to Alaska someday. You can grow some big cabbages in Alaska. All right, we're going to get going a minute early. So let's start with a title page. Title page, we've got myself, Charting Man Dan of TheChartGuys. It's August 2021. We're going to do some Q&A. I'm going to show the questions on the screen, and then I'll flash back to my face to answer them. And we're going to start it off here with, when it comes to emotions during your journey, which have you successfully learned to regulate or leave behind, and which do I let take over still? And that's regarding greed and fear. And obviously there's going to be a lot of coming back to this question because emotions are so significant. We know that learning technical analysis, the book aspect of it, is the easier part, and it's managing your emotions and the psychology of things that's really the difficult part. So setting the stage for that, I'm going to talk a little bit more in depth about this question, and we can revert back to it to answer other questions as well, because again, it's such a core fundamental aspect that you have to have down. And really what it is it's important to realize that it's recognizing your emotions. It's not eliminating emotions, because that's extremely difficult to do. This is a forever process. I'm going to be working on these emotions for the next 30 years if I'm still trading in 30 years. So you're never done. It's a constantly evolving progress that you're working towards. And again, you don't eliminate them. So I don't eliminate fear. I don't eliminate FOMO. I just am able to recognize it. And that is where observation of yourself is so key. And to be able to observe yourself easily, routine. So let's talk about routine, then we'll get to observation, then we'll get to emotions. So I used to live with no routine in my life when I was road tripping around the country. Every single day was different. I had no idea what the next day would look like, and I loved living that lifestyle. But to be a successful trader, you have to have a routine down. And watching animals that I've taken care of, whether it's goats or pigs or chickens, and watching animals in the wild, it's very clear that animals love routine. They are most comfortable when they're in that routine. They want to be fed at the same time every day. The deer and the turkeys around my yard, they do the same loop. They walk the same steps at the same time every day going around the yard. And that's what makes them comfortable. So as traders, we want to find that routine. And we want to establish a routine that consistently ditches the things that do not serve us and focuses in and adds to the things that benefit us. So if I find that, drinking a lot of coffee before the open makes me really nervous and jacked up, that's something I want to ditch from my routine. But if it makes me alert and it wakes me up and it gets me motivated, then that's something I want to keep in my routine. So again, it depends on the individual, but I cannot stress enough having this routine down. I want to be doing the same thing every morning to establish my trade game plan. I want to be doing the same thing while I'm trading during the day, and I want to be doing the same thing in the afternoon when I'm reflecting back on the day, which is why I am so consistent with doing the daily live streams Monday through Wednesday and then the daily end of day videos. It's rare for me to miss a day, and that's because that routine is so important to my consistency and results as a trader. So with that routine, once you know your routine and you're very comfortably in it, it's very easy to recognize something's wrong. Something's different. So just as an example, I talked about the flood last night. I was out there last night. It was flooding. I was with a stick fishing mice and voles swimming through the creek and trying to save them, and was pretty successful. They didn't need much help. They're really good swimmers. But it was a whole lot of unusual stuff last night. And so if it were Monday morning right now, I would reflect and say, last night was an unusual night. I didn't have my same routine. My psychology and my emotions were in a different state than what they usually are. So I would probably head into this morning recognizing that and saying, okay, things are a little different. I'm going to take it a little bit easy today. I'm going to be really picky. Maybe I'll try one trade, and if it doesn't work out, then I won't trade anymore that day. And it's recognizing the differences in your routine that make it easy. Again, you know how you feel every day and how you act every morning. And when those things are different, it stands out. Maybe something in your outside life with your family, your spouse, or your kids is weighing on you. You can recognize, okay, I feel different. I feel a little bit more stressed. I'm going to trade less. And when you don't feel anything different, that's when you're just hitting it and doing your game plan and executing. So establish a routine is key. And then recognize and observe yourself through that routine and highlight red flags when something is different. So for emotions, if I feel, just an example, I don't often feel anger, and I can remember the last time I felt anger, and I can remember the reflection and just saying, wow, my face feels really hot. That is unusual. I can't remember the last time I felt that. And that moment of recognizing that my face is hot zooms me out of the situation, and it allows me to observe it and not act on it. If I don't observe that my face is hot, next thing you know, it cascades and I'm punching a wall or whatever. That's not something I do often, but that's something that people do. So you have to recognize these emotions. I feel FOMO, and I just say, I'm feeling FOMO. I am not going to trade right now because I'm feeling FOMO. I know that if I am feeling FOMO, I should not be placing a trade, because 99% of the time in my routine, I am not feeling FOMO. So it stands out very clearly when I am feeling FOMO. As far as fear is concerned, there's definitely an aspect of fear that changes once you are successful enough to the point where I know if I have a bad month, it's not going to ruin anything. because I have enough of a profit cushion built up on the year or on the past few years that it won't be a big deal. But if I were in year 1 or 2, a red month is a lot more scary because you don't have the confidence, and the red month can be, well, should I give up? Should I keep doing this? Is trading not for me? Is this the start of my demise? It's a very different place to be in. So that fear is a lot more prevalent when you don't have the consistency of proving to yourself that I can do this. So that fear is a lot more prevalent. And again, you got to recognize that fear. And the biggest thing that you can do when you feel an unusual emotion or routine is just call a timeout and not trade that day. It is key to not trade when things are different. It's like going on tilt when you're playing poker. You can't stop, if you're in a poker tournament, you can't just say, I'm not going to play anymore. You're locked in there and you have to. But with trading, you're not locked in. You can just step back and come back after a few days. And that's going to be a theme that is going to be visited on a lot of these questions. Calling the timeout, breaking the streak. You can enter bad routines and bad habits. You have to stop them in their tracks so they don't snowball and continue to develop. Question 2. 2 questions. How do I keep focus as a trader in year 1 or 2 once the bell rings? This person feels overwhelmed and FOMO, and they assume they should be focusing on just a few tickers at a time. How do they pick which tickers they should be focusing on? They're impressed by how I keep an eye on everything. So just note that when I am live streaming and I'm keeping an eye on everything, I am a worse trader because I'm keeping an eye on everything. That's too broad. And I keep an eye on everything because that's how I have the best view of the overall market, and that's how I'm able to convey that information to others. And my goal at that point is for others to take that information and then apply it to the few tickers that they are watching. I'm a better trader when I'm not having the broad view on everything, when I'm watching, QQQ, the ETF that's related to my ticker, and then maybe one other. I'm watching 2 or 3 names at most on my screens, and that's when I'm most focused and lasered in. So I would suggest everybody does that. You want to have tickers that are your go-tos. Every year I have a ticker that is my go-to ticker. And in 2018 it was CGC. In 2020 it was Tesla. And in 2021 it's NIO. And it's just names that are very volatile. They're seeing a lot of volume. Usually it's breakouts. And I don't only trade it in one direction. I'll trade it in both directions. But if it's a blue sky breakout name, I'll have a bullish lean. And I will rarely trade it bearish, but I will be looking at it in both directions. And so just an example is Tesla was an extremely volatile name in 2020 blue sky breakout. And now in 2021, it's got an 8-month equilibrium forming. So it's got a monthly range that's tightening up right now. The volume's dropping off and the volatility is dropping off. My trading of Tesla has significantly dropped off during this period in time. I want to focus on the names that are highly volatile, and I want to get really used to those tickers. I want to go to big cap name, whether it's Tesla, Apple, Amazon, have 1 or 2 go-to names that are volatile enough that whether you're looking bullish or bearish, that there's likely going to be trades that week that you can take advantage of in those tickers. And those can be your backbone tickers that you're always focusing on. Doesn't mean you're trading them every day. Some days, Apple's going to be a daily inside bar. And if I'm looking to day trade Apple and I recognize a daily inside bar is forming, I know there's limited opportunity that day for day trading. So maybe I pass up on it. Or maybe like Tesla, I wait 8 months before I start aggressively trading it again once it starts breaking out of its tightening range. So you want your core backbone tickers, then you want maybe some more volatile names. And for me, it's been AMC, and I've recently started watching Hood a lot more. Just these recent, whether it's a Reddit name or recent IPO names that have more volatility. And I trade those names with smaller positions because they're more volatile, but there are often times where the broader market will be very contained and not doing a whole lot, and these names will be going crazy. So I generally want some names that are not correlated to the broader market. These Reddit names like AMC don't correlate to the broader market significantly. So if the broader market is boring, I'm looking at these few individual names that are a lot more volatile. And again, I cannot stress enough, you have to be comfortable with tickers, and that determines position sizing a lot for me. So I'm only going to be trading large positions on names that I'm very comfortable trading. If it's a new name, smaller position size is an instant automatic for me. because I have to get used to the bid and the ask spread. I have to get used to the volume. I have to get used to how this name moves. And like I said, with NIO in 2021 being one of my major tickers, I have learned through observation, and this is hundreds of hours of observation, that NIO is a more volatile, NIO breaks resistance right before a pullback and breaks support right before a bounce more than any other ticker that I've ever watched, as far as just the consistency of it doesn't reject from resistance, it breaks it and then pulls back. So I've had to adjust trading style a little bit to account for that, with giving wider wiggle room on my stops, because I know that it does it often. One more note on that. I wrote a couple notes here. I starred this one. A day watching trading and watching correlations when you are in your first 2 years of trading where you don't trade is not a wasted day. That is a very productive day. When you're in your first few years of trading, observing and doing nothing is very beneficial. There's a very steep learning curve in your first few years to understand how this game works and to understand, okay, this is what happens on gap ups. This is what happens on gap downs. This is watching the correlations. I didn't start watching correlations significantly between, QQQ and an individual name, or SPY and an individual name, or Bitcoin and an altcoin. I didn't really get into correlations significantly except for the last maybe 4 or 5 years of trading. So that means 6 years I was not watching correlations, and it was a level up in my game plan, in my trading, and in my results. So if I could go back in time, I was trading penny stocks a lot, and there's not really many correlations to be watching in penny stocks aside from sector correlations, but that would be something that I would do a lot sooner. Get good at recognizing correlations. When a correlation stands out as bullish, for example, Tesla and QQQ are doing very similar things, but Tesla is doing it stronger, then I have a bullish lean on Tesla that day, and vice versa if it is bearish. So do not let a day of observing and not making any trades and not making any profits, that is not a wasted day. That is essential, because again, you have to have hundreds of those days if you're going to get to year 5 and beyond, where you are hopefully in cruise control as far as your routine and consistency. Question 3, what were your prerequisites that needed to be met before going full-time as a trader? Money saved, profit targets, confidence, etc. So this is one that a lot of people, this is a very popular question. And unfortunately, there is not a clear answer for this because everybody's financial situation is so different. For example, when I decided to go full-time, and really just to quickly go over how I started trading, penny stocks and capitalizing on seasonality of the MJ sector in the fall and in the winter and into the new year, and then trading a lot less in the summer. So I didn't have a lot of consistency. I would hit a big cyclical bull move, and then I would just stop trading for a while or trade way less and then just wait for the next one. And so that was the way that I traded. And then I decided to go full time where I was trading every day. And those are two very different things. And it was probably, 5 or 6 years this way, with hitting the cycles and not trading on a daily basis except when the cycles were hot and they were volatile, into every single day I'm trading. I've got my routine down. I'm doing this every single morning. And the prerequisites, when I started trading full time, I had living expenses of $400 a month, literally $400 a month. And that's because I was in a free living situation because of my work trade, working on a community house, little organic farm that we were doing. So I had all my responsibilities, and that allowed me no rent. I had a phone bill. I didn't have a car bill because I had a used 10-year-old car that I drove. It was a phone bill, it was health insurance, and food and gas. That was it. So it was very easy for me to be able to cover those living expenses and not have fear around that. And if I had a family and a mortgage and debt or a kid, it would have been a very different situation. So the prerequisites for me were very low, where, for me, it was worst case, I can go do yard work and mow lawns and cover my $400 a month if I need to. So the barrier to entry for me was very low because my living expenses and my lifestyle was so minimalistic that I didn't have a lot that was stressful. So For me, it was money saved. I stayed between $20,000 and $30,000 a lot in my account. I was probably within that range the most in terms of years that I spent within that range because I was living off of my gains. And so I would get up to 28 and then I would have, a car bill to pay or in terms of repairs. And that would set me back $500. And so I would just stay between 25, 30,000 for a long time. And so for me, that was enough to be a little initial nest egg to play off of. And consistency was essential for, well, I don't want to go into the next question. It's a further question, but prerequisites as a trader, no debt, ideally, side income. I cannot stress enough. This is something that people in my position, as far as having a service, courses and live streams and chat community, they don't really talk about it. And it's something that's very important. Having a secondary income from running the Chart Guys was a game changer for freeing up the psychological resistances to be able to go aggressive and to lose a lot of the fear. Because again, if I'm not worried about, well, if I have a red month, how am I going to pay my bills? That is a game changer. So I suggest that everybody get a secondary stream of income if you are trying to trade, because the emotional burden that is alleviated from having an outside source of income is priceless in terms of the freedom that it gives you to maneuver around this space and make the inevitable mistakes that you're going to make often and learn from them and have some cushion that you can learn from them. And again, I always say, where if you're going break even in your first couple years of trading, you're ahead of the game, because that is, you just got 2 years of free experience. If you're red and down $10,000, you just paid $10,000 for that experience. So going break even is A-okay, but you can't live on break even, which again, the outside income is key. Before I had my secondary income from the Chart Guys, my secondary income was yard work, painting houses. I was flipping things on eBay for a while just as I would come across them. And poker, I would play some poker and win a little bit of money, and any money that I won in poker went right into my stock account. So there are many different ways to have a side hustle, but that entrepreneurial mindset of having multiple income streams is essential to alleviate fear and stress, which hinder progress as a trader significantly. Wondering whether I had any significant drawdowns or periods where setups just weren't working after I had gone full time, and what my approach was. So obviously there are drawdowns along the way. After going full time, my drawdowns were a lot less significant. My biggest drawdowns were before going full time. I started by hitting it big on a penny stock and making 700%, and I'm a genius, I'm on top of the world, I'm investing in this bad boy, it's gonna make it. And then I give all of those gains back. That was a massive drawdown lesson. I had a big drawdown where I was only looking to swing a Chinese penny stock. I didn't even know it was a Chinese penny stock when I was trading it, but 50-cent stock, looking to trade it for 2 days, swing trade. And it delisted overnight, my first night holding it. And I lost maybe 80% of that position, and it was maybe 25% of my entire trading capital at that point was gone overnight. And that was a huge lesson for me. And the big takeaway was, wow, I recovered from that mentally very quickly. This game is for me. That was a big prove it to myself moment that, I was not happy, obviously, but I wasn't lamenting and I wasn't beating myself up and dwelling in the negativity for days. I was over it after a day or two. And that was a big change. Or that was a big recognition, I should say, in my abilities to keep doing this. But significant drawdowns after I started full time, it would still be the thing that most traders see, where they can have consistency for a while, but then they slip up on their stop loss plans. And I would get in too big into a position and it would run away from me, and I would get back a week worth of profits in one trade, 3 weeks worth of profits in one trade. And then I would stop, I would call a timeout, I would take a break from trading, whether it's a day or a week, however long it takes. I go to nature. Nature is my mental reset. Whether I need to go camp for a day or just go on some hikes and leave the screen behind and just completely start with a fresh, clean slate when I come back. Because again, I want to call the timeout and not build on negativity and build a negative routine. The last thing I want to be doing is developing bad habits that I continue to repeat. So for me, it was just, okay, how long can I put in between when I'm going to make that mistake with my stop loss? Because it's going to be inevitable. And this past 2 years is the longest I've gone without a big mistake of just letting a trade run away from me. And it used to happen maybe every few months, and then maybe once every 6 months, and then once a year. So those drawdowns would happen, but it is taking a break as soon as they happen to not compound on mistakes that was key to approach a solid drawdown. Question number 5, I think. What's my motivation and the goal to my journey as a trader? So it definitely started out money. Well, money was a main thing. I want to make money, but why do I want to make money? I want to make money because I watched my dad commute 45 minutes in traffic into Boston every single day, to and from 45 minutes, and I looked at that and said, wow, I'm never doing that. I am never doing that. And that was a huge motivation for me in college to start trading stocks. I was saying, all right, I see industrial hemp and CBD is coming. I'm either going to Canada to learn how to grow this plant because they've been doing it for a decade, and I'm going to bring that knowledge back to the US for when the legal landscape changes, or I'm going to trade stocks. And I was already dabbling in stocks that were based on industrial hemp and marijuana back then. And that was the fork in the road path. And I chose stocks and stuck with that. But it was all just, I'm not doing that 9 to 5 grind. I'm not doing it. And whatever I have to do to not do that, I'm going to do. So money to not have to do the 9 to 5 grind was motivation as a trader. At this point, it's very different. And after a lot of success, if I didn't have the chart guys, I wouldn't be day trading every day. My results would probably suffer just because I wouldn't have as regimented a routine. Accountability, well, there's another fork we can go off on. You want to have accountability to more than just yourself. It's important to be accountable to yourself and have discipline, but when you bring someone else into the equation, it levels it up. So I suggest everybody get a trading friend or a small group of trading friends or a big trading community that you are interacting with to have accountability for more than just yourself. You know, if I'm talking with my friend and I tell them I entered a trade and my stop loss is this level, the fact that I just told my friend that I have a stop loss at this level makes me a lot less likely to skip that stop loss or not put it in because I told them I'm going to do that. And if I don't, then I'm a liar, and I'm not a liar. So for me, that accountability is massive. So with the chart guys, I have this consistent routine that is keeping me a consistent trader. And if there was no chart guys and I was by myself, I know for a fact I would not be in that same regimented routine. So at this point, the motivation that I find, you know, it's less about the money at this point, and it's more about helping people. And that's just because, you know, I would say, all right, I'm good for now. You know, I don't need to constantly try and make more. I don't have that. I look at entrepreneurs that make hundreds of millions of dollars, and I just think, man, I do not have that drive as far as more. Just never satisfied with, you know, the amount of money that you have or what your net worth is. And I felt that drive massively in the first 4 or 5 years of the chart guys, but I also feel it fading in terms of, again, I don't have that, like I'm not trying to make $100 million here, and props to the people that can continue to keep that drive up. But for me at this point, it's about helping other people and interacting with other people and, you know, friends, hanging out with friends and doing this. And especially during COVID, that was huge. You know, everybody's locked up, but here nothing changed about this community and we're all interacting with each other. And that was a big benefit as well. So at this point, it's shifting more towards the people aspect of things, away from monetary, but it definitely started with monetary and not wanting that 9 to 5 grind. Do I have any touch scenarios for my long-term no-touch crypto positions? So I've got long-term no-touch crypto positions, and yes, I'm not just going to blindly say I will hold them forever no matter what. You know, if we have quantum computing, I know that's something on the horizon for the next 5 or 10 years, and if there were to be something that quantum computing just suddenly registered everything as insignificant in the crypto space, you know, I'm not going to hold for a 90% drawdown as everything collapses. I'm going to sell at least half. So there are definitely, you know, if the US just starts this campaign of cracking down and passing laws and everything shifts. Again, these are not likely scenarios. These are very unlikely scenarios, but there are some unlikely scenarios where I would definitely decrease the size of my no-touch positions if they were to take place. So it is not just a blind hold. It is a blind hold unless a 0.1% scenario takes place. As my account grows, when do I decide to increase position sizes? So for me, it wasn't my account growing that led to increasing position sizes. It was increasing position sizes that led to my account growing. Why did I increase my position sizes without my account growing? It was a number of things. Number one, secondary income allowed me to go more aggressive. Number two, the setup, blue sky breakout. The most aggressive that I've ever been as a trader is blue sky breakout scenarios. I did it with a penny stock boom in the MJ space in 2013, 2014. I did it in crypto 2017. I did it in Canadian MJ 2018. And I'm doing it less now in this most recent crypto run because I'm more conservative now that I hit those goals by being aggressive. But it was the setup more than anything. I looked at Ethereum, I say, okay, I don't know a whole lot about cryptocurrency. I've read some articles, I understand the concept, maybe I understand 5% of it, but I know what a blue sky breakout is, and I know the power behind a blue sky breakout, so I'm gonna smash it. And I put in, again, I was in that 20 to 30K account value, ping-ponging around in that space for a few years, and I was at that point when I decided to put 90% of my trading capital in ETH. And it was just, okay, I'm going to do this, and I'm either going to be wrong and give back half of my money and start from scratch, or I'm going to be right and I'm going to double my money. That was my goal. I want 100% gain to have a down payment on a house for the eventual future, and then just stumbled into a 1,400% move. So goals were far exceeded. And that was key as well. That's what kept me going aggressive. Once I smashed my goal of 100%, I stayed aggressive because at that point, my mindset was, we're in blue sky breakout, there's a ton of hype, and if I make a big mistake going aggressive at this point, I'm just gonna get knocked back down to my initial goal. And that is A-okay with me. So I guess I moved up a mental stop loss of if I get back to my initial goal level, I'm done. And it just kept going up. And so I just kept being all in on these positions and playing the oversold bounces, and just having RSI being oversold in a bull market as a consistent indicator just allowed me to constantly be all in on these oversold bounces and seeing very significant gains. So it was an increase in position size due to a lack of fear because of a secondary income and a technical setup. And then I went real aggressive into the Canadian MJ Blue Sky run right after that, and then compounded those gains even further. So the time to go aggressive, your most aggressive, is in Blue Sky Breakout. That is the most favorable setup for a bull where the gains can be most significant. And we just keep seeing it. Tesla did it to an insane degree. AMC and all these Reddit stocks doing it to an insane degree. Blue Sky Breakout is when the exponential gains are made. So that's the time to be most aggressive with position sizing. Right now I'm in conservative protect profits mode. When I was in aggressive mode some years ago, what were the keys to my success? So trying to replicate that kind of aggressive account building style. So that goes right into that question, answering that. Blue Sky Breakout. Blue Sky Breakout, confidence to be in all-in position, but you're all-in position. If you lose all of it, you're A-okay in life, right? You're not risking more than you can afford to lose. So if I lost all of everything that I put into the cryptocurrency space, I was going to be okay. It would have been a major setback, but I would have been able to keep living. And my lifestyle wouldn't have changed a whole lot because, again, it was a minimalist lifestyle to begin with. So Blue Sky Breakout is when you want to be aggressive and level up. I have never used leverage to level up. And I can't speak because I don't have that experience. I know people that have used leverage to level up, but when you're using leverage to level up, it is so much easier to lose everything. You can lose everything being too over-leveraged trading cryptocurrency on weekly consolidation. And if I'm not using leverage, I can't lose everything on weekly consolidation. I can only give back profits. So I would suggest staying away from, I mean, how many massive breakouts have we seen in the last 5 years of trading of insane gains in all different stocks and crypto and sectors that don't need leverage to make insane gains? So I would say stay away from leverage. And that would just be the simple way to approach it, in my opinion, to eliminate that risk that you blow up your account. I've never blown up an account. And that's because I've never used leverage. All right, we're in the home stretch here. I think we got maybe 4 more questions. How do I manage my watch lists? How do I stay on top of many tickers, alarms, notes, and this person feels overwhelmed? So I definitely eliminate things, and I have rules. So right now, I have determined that in my career, with where I stand, that it is more beneficial for me to trade stocks than it is cryptocurrency consistently on a daily basis because of fees. At this point, I've paid 6 figures in fees in crypto and $0 in fees in stocks over the same period of time while trading exponentially more dollar volume in stocks. It is much more beneficial to my trading style. So I don't want to give up on the crypto space, but I'm only trading Bitcoin and Ethereum. Sometimes I'll trade some Link, but I can count on one hand the amount of altcoins that I've traded in the last 3 years. And that's because I am in a mindset where I'm saying my primary source of capital gain income is day trading stocks. My secondary source is trading the cryptocurrency space. My secondary source only has a few focuses, and that's so I'm not overwhelmed. If I was sitting here on a daily basis and trying to determine, am I going to trade, ADA or Link or FTT, or am I going to trade NIO or Tesla, I would be overwhelmed every single day. You have to limit things so you can focus and, again, get to know those individual stocks or cryptocurrencies, how they trade, how they move, get your routine of familiarity with those trading instruments so that you can hit it day after day and get that consistency. So I have 2 crypto that I will trade, Bitcoin and Ethereum. And yes, I'm leaving money on the table, but I have determined that because of fees, it is most wise for me to stick with stocks for now. And that will change. But there are times where I will just focus on 3 stocks for the day. And if those 3 stocks don't give me the setup that I want, I don't trade that day. And I don't go looking for other setups that weren't a part of my game plan to say, well, I gotta see something. But I try and keep it as contained as possible. And again, I cannot stress enough how not trading on the day is not a bad thing. Utilize that power. That is a superpower that a trader has. You determine when you play this game, and you don't have to play it at any point. Use that power. It is very powerful to be in that kind of control. So if the setup isn't there on the few names that you're watching, see you tomorrow. Last 4 questions. How long did it take me to get good at small losses and avoid over trading? Lots of people are profitable, but then they have that one mistake that gives back a week's worth of profits. So for me, the consistency did not come until the large position sizes came. And that is because, again, I was a more seasonal trader where I would hit it big and my account would go up during these months when the breakouts were happening. And then when there wasn't a breakout, if I kept trying to trade, my account would go down. And I just stopped trading as significantly when things were dropping. I learned those lessons. I made it big in penny stocks in the MJ space, and I got up to my first, nice hurdle, and then I started to trade as the hype faded. And I gave back maybe 10, 20% of my profits. And I said, okay, well, I'm not just going to slow bleed forever. I'm going to stop trading here. But once after the crypto boom took place and I got a nice stack to play with, that's when I went with just daily base hits for consistency. And that's recently. That's in the last 4 years on an 11-year journey that I've gotten really good at just small loss. And it was the mindset shift of the mistakes that I'm going to make being in conservative mindset. My mistakes will be leaving money on the table. So there are often times where I will take a small loss or lock in a small win and the trade will keep going. And I left money on the table, and that is my mistake. It is not often that I have a big loss. And I actually just had one for the first time in probably 12 months a few days ago. And that was a 1-year wake up. And it's just a reset. It's a mental reset, okay? That loss was bigger than one that I've taken in a while. And I know that I need to stop that bearish momentum and get back into the grind of what's been working for me over the years. So it was a sizable stack that allowed me to focus on smaller time frames, quicker moves, day trading, and scaling in and out. Scaling in and out over the last 3 to 4 years has been a game changer for me as far as keeping losses small and having just consistent base hits. Because again, the trade that I love these days is exiting half my position into an initial short-term move that's a small piece of the bigger move that I'm looking for. And if I'm wrong, it is a break-even stop out. And I've been doing that more in the last year than I've ever done. And I've been more consistent in the last year than I've ever been. So I would say that scaling in and out with a couple positions in both directions has been an absolutely significant aspect to that shift in my trading style. How do I keep myself in check? Hot streaks, cold streaks, and when my account value is just ping-ponging around. So again, this is tying back to the first question. If I'm in a routine, I can recognize when things are different. I can recognize when I'm feeling euphoria or feeling fear. That's our emotional spectrum. Euphoria, fear. As traders, we want to be around the middle and we want to be more balanced. But there are times we stray to both sides of that spectrum, and we must recognize it in ourselves through observation. Zooming out, saying, wow, I just made a big win. My heart's pounding. I'm recognizing a physical change in my body. I'm recognizing mental thoughts that I don't usually feel or don't usually think. This is different. And different on either end of this spectrum, a big win or a big loss, I'm done trading. And I'm taking a break. And I'm getting off the computer. If I have a week maker day trading, I'll go outside and I'll take a lap. I treat a big loss the exact same as a big win. And that's by resetting my emotions. Because once I start to go to either end of this spectrum, I call the timeout, I stop trading, and I go into nature to try and get back to the middle point. Because I don't want to be trading in euphoria mode. And there are times where you do. There are times where you must. And 2017 or 2021 crypto, where it just keeps going up, you're feeling euphoria, but you got to keep taking advantage of that opportunity because we know that opportunity will not last. It's going to stop eventually, and that's when you keep trading with euphoria. But you got to keep that euphoria in check and understand it. You never want to be continuously trading when you're in fear and losing. It's always very easy to call the timeout there and stop. But when there's a short-lived opportunity, you can trade through euphoria at times. When my account is ping-ponging around, this happened fairly recently. I want to say sometime, maybe the start of June, the first 2 weeks. I was on a really nice hot streak all summer. And then the start of June, the first week or two, just sideways, up and down, and saying, man, I just can't get it going. I can't feel the flow. And I'm clearly noticing that mentally, I just don't have the confidence that I had all of the last 3 months. It's a notable shift for me. But for me, it wasn't, the last thing I want to be doing in that situation, sideways, is forcing trades. Instead, that tells me, okay, be more patient. Wait for the trade to come in your wheelhouse. And this is why when you're starting out trading in your first few years, you need to identify what your edges are as a trader. And that's by, keeping a trade journal and recognizing, I'm losing on these oversold bounces. I should stop trading that style. I do really good at shorting. Maybe I should focus on shorting more. So for me, if I'm going sideways and I can't get those wheels turning as far as my flow and consistency, I wait for the trade that is my trading edge and in my wheelhouse. And most recently, I was puttering sideways and NVDA had that big drop and then it had a gap down open into 4-hour extreme oversold conditions. And I said, well, this is it. And I went fairly aggressive on that trade. This is my trading style. I love those oversold bounces. And I had a week maker plus on that trade. And just like that, my sideways was gone and I was off to new highs. And it was like that sideways never happened, because if I had 5 sideways days where my account is making no gains, my week maker just gave me an average of a day maker every single day. So if you're sideways and frustrated, hopefully you have identified your edge as a trader at this point, and you wait for the setup that's in your wheelhouse to then go a little bit more aggressive and say, okay, this is what I've been waiting for, and this is what is most comfortable to me to try and break this sideways streak. And again, the last thing I want to be doing is forcing trades in a less than ideal environment to try and break the sideways. The trade has to come to you. They'd like to know when my aha moment was and how long did it take to get there. Assuming I went through a period of time where I was not consistent, and did I have an epiphany moment? Their epiphany moment is realizing that most of the time they don't have to be in a trade, and now they are more consistent with their profits. And again, that goes back to power, the power of choosing when you trade. You don't have to be in a trade. And this individual recognized that power and is now wielding it to their advantage. So for me, I had an aha moment, and it was, I was in a 20, 30K rut for a while, and I've had 2 20, 30K ruts. The first one, and then on a 2013, 2014 MJ penny stock boom. I was in Costa Rica for 6 weeks, dog sitting on a little shack on the beach, one of the best memories of my life, and this was happening. And so I had my laptop, and I was trading this blue sky euphoria market. And I can remember coming back from that trip with maybe twice as much money as I left with. And that was when I went from 2030 and hit that first landmark of 100,000. And I can remember I was maybe 24, 25, and I had a moment. I can remember walking out to the kitchen, and my dad was there, and I can remember saying, I'm going to be a millionaire. And I was just, that's not something that I would usually say. And it was just this confident, I just know. In every bone in my body, this is going to happen. And the reasoning was, okay, I just smashed for 400 to 500% gains. I just smashed this opportunity. And I was just thinking of it from a completely marijuana sector standpoint. These aren't even legitimate companies. We have so much further to go over the next decade with legalization, more states legalizing, federal legalization, actual legitimate companies trading on the NYSE and the NASDAQ. This hasn't even started, and I'm at the 100K mark. And so I just knew that I would be able to trade this sector over the next decade and compound those gains to significant levels. So that is when I gained my first, for sure, confidence. Like, I can do this for a long time. And as far as and again, at that point in time, it was a cyclical thing. Smash the bull market, and then don't give profits back in a bear market. So it wasn't an everyday thing. And I didn't hit those consistency, I didn't have the consistency of, I can make money every day. Right now I have just this mindset where I'm going to make money today. I know I am. And obviously I don't every day, but that's the approach at this point. And I didn't reach that until I had the sizable capital and got really good at just day trading and the scaling in and out. And then once I hit the consistency of the last 2 years, I just know that, if there's a market, I am going to find a trade setup that I'm comfortable with, and I'm going to make money. And that is very recent, last 2-3 years versus the first. So that MJ aha moment was probably 4 years in. We'll call it 4 years in, had that first aha moment. But then it took another 4 years, 3 to 4 years, to get to the I can do this every day thing. Last question, and then we'll talk to the YouTube chatters. How long did it take to learn technical analysis and trading when I felt my education and experience came together? And how long did it take you to become reasonably confident when you felt like I knew what I was doing? And what were the biggest hurdles to overcome? So that just goes into mainly what I just answered. And again, 3 years. 3 years was a big hurdle for me. 4 years. We're going to keep it at 4. 4 years, confidence. But again, not an everyday kind of thing. And I was confident that I could make money every year, but there were months where I would be trading dozens of trades a month. And then there'd be months where I'd take a few trades a month, and I would be away from the computer a lot more, and I would be traveling and road tripping around. And How long did it take for me to become reasonably confident when I felt like I knew what I was doing? I knew technical analysis was the way, and that was the way to be consistently profitable. Year 4. And that was when, year 2 to 4 is when I really started doing my own technical analysis. And then watching others and mimicking, okay, this is what they would say by looking at this chart. They would note this RSI, they would note the trend, they would note this 20-period simple moving average, and I was just replicating what I saw them doing. And I was doing it myself, but I even would type the way that some of them would type just by... And these are people in forums. And I found the people who knew what they were doing and showed me consistency, just observation. I was observing these people and saying, okay, they're more right than they're wrong, and they're more right than everybody else. I want to learn from that person. And so I would mimic their typing style of technical analysis. And that was a big level up for me. And then once I started teaching people, massive level up in my confidence and skills. I would not be half the trader that I am today without starting the Chart Guys to teach other people. That just, talk about exponential learning curve of skills and learning from everybody as much as I was teaching. I had never traded gold or commodities. And then we had gold and commodities traders that are asking me about charts. I can tell you all about this chart, but they were telling me the intricacies of, I didn't know what an oil inventory report was. Okay, oil inventory report every week. We got to watch this. And I was just sucking it up from all this interaction with other people. And I can tell you what's going on in the chart, but I learned all the little nuances along the way as well. So there's just periods of level up, doing my own technical analysis and posting it publicly, interacting with others, teaching others, big level up, recording videos, and getting outside of my head and putting my thoughts out there and then reflecting on those thoughts. Huge level up. So just these consistent level ups. And that's why I could say to everybody, get out of your head. Do not trade by yourself. This is a team game. Work with other people. Work in a community. Work in a small group. It's hard to find people in your area locally that are traders, which is why the internet is such an amazing tool. So get outside of your head and find trading friends. And find trading friends that have as much motivation, if not more motivation than you, and that have the same goals. When you are with a group of small people and your goals align, something magical happens. And this happened for me living in the small community house as a trader, but then starting the Chart Guys. And I was living with an entrepreneur and he rubbed off on me in a huge way. And we just had similar goals and mindsets for entrepreneurialism as well as our garden. We had the same goals on the garden outside. And just every day, we were just interacting with each other. And it was just such a space of productive, creative growth mentally. And then translating that into productivity. And it was invaluable. Entrepreneurialism is contagious. If you are interested in a secondary income stream with entrepreneurialism, find a small group of people, even if it's online, ideally in person, but if it's online, again, it's so powerful to just have these brainstorming and again, getting outside of your head and reflecting. And even the fact, even if you're getting woo-woo with it and saying, when I vocalize something and putting it out into the universe, there's a vibrational event that takes place and it makes it more likely to become a reality. And I believe that in a big way. I can't understand it. I can't explain it with science, but I am very confident that that takes place. And that's an aspect of getting outside of your head and saying things. If I think I'm going to put a stop loss at 975 on this position and stop out if that level breaks. If I think it or if I say it, those are two very different things. If I say it to somebody else, I am much more likely to put that stop loss in. Get outside your head, get friends, get a community. All right, I'm now looking at the YouTube chat. And I would love to interact with you all there. We'll go for another 20 minutes or so. Happy to answer questions. We'll start with one right here. I haven't even read it yet. Have I hit any specific emotional performance flaws? So performance flaws, lack of patience, and I knew that before trading. I knew I had a lack of patience because I went on a road trip with two buddies and I was constantly like wanting, I wanted to wake up at 7 and get on with the day. They wanted to sleep till 10. I was constantly just, all right, you gotta be patient or you're gonna have a bad time and you're just gonna be in a bad mood all the time. So patience was a big one to work on myself outside of trading, and then reflecting on that and applying it to trading as well. Patience. I don't have to be in a trade. I don't have to trade for 2 months. I can wait for the breakout sector, the seasonality shift, and then I can start trading. So patience was a big one. And again, you will find as you work on becoming a trader that there are so many overlaps with your life. Trading is a lifestyle, and you have to have so many things down in your life. A healthy physical routine, healthy eating habits, a healthy sleep routine. I haven't talked about sleep routine. Going back to the initial start with routine, sleep is essential. I make so many decisions based around my sleep schedule, even on weekends. I don't want to throw off my sleep schedule for the next week. I've got a college reunion at the end of September. I'm going to go meet up with some buddies, and there's a dozen of us, and we were going to get one big Airbnb house. And I'm thinking to myself, I'm going to be sharing a room with 3 other dudes. They're going to be up till 3 a.m. I don't do that. I'm going to bed at 11. I'll see you tomorrow morning. And it's just not wanting. So I got a different house, and we're going to break off a little bit and not be all packed into one. But it's just recognizing that if I did that, my entire next week is out the window. My entire routine and sleep routine would take a week for me to recover from that. So it's important to have a consistent sleep routine if you want to be a successful trader. What has been my favorite do good things experience? When COVID started, there was an older guy who, again, he just could have been my grandpa out on the side of the road, not a drug addict in any way. And he was staying at the Salvation Army down the road, and he had a sign first time, and couldn't pay his rent, so he was out. And I just got friendly with him, and I was able to write him a check for more than I've ever given a stranger in my life multiple times. And that feeling, just knowing that I could change his life in a small way. And he was telling me he was putting it in his savings account and he's working up towards rent. I haven't seen him out in the street. Good old Roy. I haven't seen him. He was in the same spot for a long time. I haven't seen him in many months. So he's either dead or things went well. And that was a big one. And that's part of my motivation. So going back, motivation to help other people with trading. But I love being able to give freely. And I'm in this local group on Facebook that was created during the pandemic. And there's a woman who doesn't have a car, and she needs books to read. And for me to be able to just send her, $50 makes a huge difference in a lot of people's lives. And to be able to just dish that out to strangers in my community, I love it. It's addicting. And it's probably, it self-serves my own ego to a certain degree because I do it and it makes me feel good. But I think that's a win-win. If I make my own ego feel good and I make that person feel good, it's addicting. And I love it. I love driving around with a wad of 20s to just give away 20s to anybody that's homeless. I don't care what you look like. I don't care anything about your situation. I'm just going to give you $20 if I see you. And I love the freedom to be able to do that. And that is part of my motivation to keep the income coming in so I can just keep doing that. And that would change. If I didn't have an income stream, I would tighten up a little bit. And if I were to have kids and be building a legacy for my kids, that would change a little bit. So I like that lack of attachment. And next question. If I had to select only one indicator to base my experience on, no. If I could choose only one indicator to base a trade on, what would the indicator be? RSI. RSI, because oversold bounces are my jam, and RSI is the big picture for oversold bounces. I love it. Doesn't work all the time, but I've honed in. I've gotten better at oversold bounces in the last year because I've gotten better at falling wedges in the last year. I used to place my stop right under support. Falling wedges would stop me out all the time before I recognized what a falling wedge was. And now that I'm getting good at falling wedges, I am an even better oversold bounce trader than I used to be. So RSI is first, volume's probably second, price action is first. But price action, I wouldn't call it an indicator. I don't know, maybe you would. Price action, RSI, volume. Those are my big three. I've often said that I use the retracement levels 382 to identify potential flags, 50% retracement to identify potential equilibriums. Is it possible to get something like a false breakout? Absolutely. Every single signal that I use, even if think about it this way. If I have a signal that is 95% effective, that means 1 out of every 20 times it doesn't work. And most things are not 95% effective. If you've got something that's 80% effective, that's very effective. That means 1 out of every 5 times it fails. And that is why having a stop loss on every trade is so essential. Because the highest probability setups fail at times. And if you are not anticipating that it can fail, that's when you get blindsided and give back 3 weeks of profit on one trade. So absolutely, a 50% retracement can drop to a lower low. And you have to be prepared for that scenario, and you have to manage your risk to prepare for that scenario. It's not the most likely scenario, but it is a possible scenario. And again, tying that back to poker, you can go all in with aces pre-flop, and anybody that's played poker for any significant amount of time loses with the best hand pre-market all the time. It happens dozens of times if you're playing thousands and thousands of hands. So if I'm taking thousands of trades, high probability setups are going to fail dozens and dozens of times. It's just the laws of probabilities and the way that it works. Chris is about to trade for a living and quit his job. Best of luck, my man. Glad to help along the way. Consistency. That's one more thing. So quitting, and I didn't touch on that one, on that question. So quitting a job or going full-time as a trader, you must prove consistency. Dollar amount doesn't mean anything because, again, I can smash a bull breakout, and this is what happens to everybody. You smash a crypto bull market, you think you're the greatest, and then you hit a bear market, and you get back 50% of your profit or more. And then you say, well, I just quit my job, and I didn't know about this. You have to prove consistency through bull markets and bear markets. And if you were making money, if you're trading stocks and you made money on the way down of the COVID dump and on the way back up, you're proving consistency because you have two completely opposite markets that you are able to profit in. Same thing with crypto. If you're making money on the 80% drawdown and then you're making money on the way back up, you're proving consistency. So more than the dollar amount, you can make $1 million on the run up. That doesn't mean you can quit to become a good trader or a full-time trader. You have a cushion, but you have to prove consistency through different market environments. And again, even if you quit your job, if there's some way that you can stay on as a consultant or get some kind of part-time gig, again, I cannot stress enough the psychological burden that is alleviated by having just that little bit. Even if I'm just covering my food, my living expenses of food by doing yard work on the weekends, that helps mentally. I don't know, dragon fruit. Talk a bit about why I'm so into the MJ movement. It's one of the rare moments where you see where I'm about the fundamentals and the charts. And would I ever buy a company based on fundamentals? So now I would, yes, but I wouldn't for a long time because, again, I was bred in the penny stock world where everything is a scam. And I learned those lessons the hard way. So I learned the biggest lesson I learned as a trader is don't trust the fundamentals at all. All that matters is the price action. It can be the greatest company in the world and still drop 60%. So don't go long on anything is the lesson that I came away with from my first 5 years of trading. In hindsight, you look at IIPR that gives dividends, and we covered it during the IPO, and since then it's now up 1,000% in 4 years, 5 years. And so obviously in hindsight, that's something I want to go long. I didn't have an IRA at that point, but that's something to stick in the IRA and set it and forget it. I'm so interested in the MJ space because I love the plant. I love the legal landscape shifting. Like, it was very clear for me in 2010 to see. I read the book The Emperor Wears No Clothes by Jack Herer, and I just saw as clear as day, everything's going to change. The laws are going to change, and the health benefits are going to become more widely available. There's been a misinformation campaign that the internet is going to solve. And I could just see that it was the starting point of a long road of change. And the snowball was building momentum. So just recognizing a massive opportunity is what it boiled down to. If I were trying to build trading capital from a small sum right now, which sectors, tickers would you focus on? DCAing into a trade? The only DCAing, dollar cost averaging, that I like into a trade is something that's set it and forget it. Long-term mindset. Not as a, I'm going to hit it big quick and up my capital and hit the next level. I would avoid margin trading and I would avoid leverage. I would avoid leverage trading, and I would look to position for changes in legal landscape are huge catalysts for sectors. MJ sector, the psychedelic sector is very, very, very young. It's in its infancy. And in my opinion, there will be blue sky breakout, euphoria, 500% plus runs in these stocks. The timing is the hard part. So I'm not just going to dollar cost average into these names knowing that they can slowly fade for a year. But I'm going to be paying attention to that shifting legal landscape, and I'm going to capitalize on blue sky euphoria when there's a little bit of a fundamental catalyst, legally speaking, in the legal landscape changing. There's blue sky breakout, there's the most volume it's ever seen, and there's social media hype. And when you got those four things, that's the sweet spot. And again, it's happened multiple times in the MJ sector. Penny stocks in the US 2014, Canadian MJ 2018. From the lows of COVID, US MJ names now saw many hundreds of percent to the upside. That was not a blue sky breakout scenario. That was an extreme fear opportunity with the entire market dumping. But I would say focus on education and observation more than actively trading, because you're not going to, if you're starting with a smaller account and you want to level up hundreds of percent, you're not going to get there day trading a regular old market. It's got to be a hype euphoria market if you get those gains quickly, if you're going to get those gains quickly. So crypto just did it, unfortunately, in terms of, a year ago or however long it was ago, where we just saw a multi-week equilibrium that broke out and we hit blue sky again. And then that's when the party got started. So I wouldn't be looking there at this point. I would be focused on USMJ. I would still be paying attention to for any significant shifts that allow for capital to enter the space, any banking laws changing, any federal laws changing. And one thing you'll learn when you're watching sectors that are related to legal landscapes, my God, is it slow. So again, that's why you don't want to dollar cost average in. It could take 2 years. I'm going to make a lot of money in the psychedelic sector. I know that. I haven't yet, but I know that those pieces will align for a period of time, probably just a few months, when things go nuts, and I'm going to smash it. And I'm going to wait until that happens. And I'm going to be patient. And I'm not going to be trying to hit it too early. So you don't want to be too gung-ho, like, all right, I got to leverage, I got to get big now, I got to go big fast. Because if the stars are not aligning, and these stars align, in my experience, it's been about once every 3 years. And sometimes there'll be, 2 right back to back, like crypto and Canadian MJ. But they come along. In the last 11 years, there's been maybe 4 of them. And more than that. I mean, the 3D printing space did it. Go look at DDD and SYSS monthly charts. Look what they did. And you can look at, there's some commodities that exploded to the upside. So these euphoria, massive bull markets. I mean, Reddit, it's probably more like once every year and a half on average over the last 11 years that there's been one of these massive opportunities. Blue sky breakout is the most common denominator for those opportunities. No long-term MJ positions at this point. When learning charting, would I recommend trading indices and ETFs? Absolutely. And leveraged ETFs are a way to increase volatility. You know, if I'm watching the financial sector and I'm interested in the financial sector, but it's only moving, you know, big day is 1%, then the leveraged ETFs are perfectly fine if I'm looking for short-term trades because they're only going to be moving 1 to 3% on a solid day. So leveraged ETF, don't let the term leverage turn you off because those are perfectly fine in many scenarios. But yes, I like watching indices. And again, it's the correlation observations that will pay dividends 3 years down the road when you're a lot more comfortable watching all these aspects in play and recognizing bullish correlations versus bearish correlations and having that tilt your lean. You know, you want to stay as unbiased as possible, but if I'm recognizing a bullish correlation, that tilts my bias bullish. What does scale in and scale out mean? It just means placing orders. I'm not trying to nail the bottom with one order and that's it. I've got an order at 52.45. I've got an order at 51.95 in case 52 psychological breaks, and then I set my stop loss. So it's just using multiple orders on the way down, and then an oversold bounce gets going. I take half of my profit on the 5-minute oversold bounce. I'm trying for an hourly oversold bounce. I want the trade to play out longer, but I'm taking partial profit to lower my break even on just the first initial bounce. Because if we 5-minute oversold bounce and then see another leg down and there's no hourly bounce, my break even is much better. I have exited a good chunk of my position, and that frees up capital to stay in control of the trade, as opposed to, well, I made my entry and it keeps dropping. Now what do? I either stop out and take a loss or don't stop out and pray. Gotta let my dog out the door. Shitty pants. So bag holders, the USMJ sector is full of bag holders. Any advice for them? I mean, the only advice is you have to learn it. I can tell, I mean, how many traders have I told you have to have a stop loss on every trade, and they don't? And I've realized to a certain degree that people have to experience things for themselves, and they have to feel the pain. You have to literally feel the physical pain in your body if you're going to learn that lesson and not repeat it. So I was a bag holder in penny stocks. FLPC went from 7 pennies to 40 some pennies while I was road tripping. And I was the king of the world. I can remember in one day, I just made the value of my used car in one day. Mind was being blown left and right. And I rode it up, and I rode it all the way back. And then I said to myself, I will never do that again. And I never have. So it is stop losses on every trade. It doesn't matter if it's a long-term fundamental investment, because it can always go lower than you think it can. It can always go higher than you think it can. It can always go lower than you think it can. And you just have to learn from this lesson and work your way through it, and then just never let it happen again. Am I interested in Elliott Wave? To be honest, I'm not. I'm not saying it doesn't work. Any aspect of technical analysis that I don't use, the way that I view it is, there is an Ichi Cloud trader out there that is better than me. There's an Elliott Wave trader out there that is better than me. I'm a price action trader, an oversold bounce trader that is better than most Ichi Wave traders. There is no one way to do technical analysis and trading. And you can have these styles and be successful. So I've reached a point now where I'm not looking to change anything. And if I ever hit a rut, a consistency rut, and I just can't get out of it, then okay, it's time to change something. But at this point, 11 years in, I'm not looking to learn new things. I'm not looking to learn Elliott Wave. You know, it was nice most recently in the cryptocurrency pullback to learn, okay, that's a Wyckoff pattern, and I could recognize the pattern. I didn't have a label for it or a name for it, so I'm still picking up tidbits, but I'm not now a Wyckoff trader. So I'm sticking with what works, and I know that Elliott Wave works for a lot of people. It just is not part of my trading style. Has it happened where I reinvent myself as a trader and discovered a new way of trading or a strategy that resonates with me and becomes primary? Yeah. Once I leveled up going real aggressive in Blue Sky Breakout and got a larger size of capital, I started scalp trading. And also, trade commissions going to zero. I used to pay $6.95, $7.95 a trade. And when my account's $30,000, $15 every trade, if I'm trying to trade, day trade, I'm spending $50 to $100 a day or $300 a week. That adds up. As soon as those fees go to zero and I have a large capital size, well, heck, I can make, little 5-minute trades and lock in 0.5% consistently. And that 0.5% move is easy for me. So scaling in and out, and then more scalp trading mindset where trades are lasting 25 seconds to 15 minutes was a game changer in my style. What do I look for signs for a top or a bottom? I look for volume climaxes, and I look for gaps. Oftentimes, a gap up after a significant bull run will mark a temporary top, just like a gap down will as well. How do I calculate a day maker or a week maker? Do I take my yearly goal and divide it by an estimated number of days? So that number is different for everybody. And again, if I have $400 cost of living a month, which I don't at this point, but if I did, my day maker is way smaller than it would be than if I have $2,000 of living expenses. So it's different for every individual. For a lot of people that are working other jobs, a day maker is what they're making at their other job. For me, it is just a level that I want to consistently hit. And yes, it's an annual goal, but I recognize that I'm going to have red days. So if I want to make $100,000 a year, I'm not just dividing $100,000 by 250 trading days or however many there are. I'm saying that I know there's going to be red days in there, so I would want let's just say that, if $100 a day would give me the annual goal that I want, I'm trying to make $150 a day so that when I do have the red days, I can still meet my annual goal. Because the red days are going to happen, and you're going to give back your profit from the previous day. You want to reach a mindset of comfort and consistency and discipline so that the size of the loss that you take on a red day is, I'm going to make that tomorrow. Well, okay, no biggie, red day, I'm going to make that back tomorrow. And then you do that enough times where you have a small loss and you stop out and you stop trading to stay disciplined and you make it back the next day where you say, wow, this is really the way to do this game. After my vacation, do I feel like it took a few days to get my mojo back? Absolutely. And there was a moment where I said, uh-oh, what have I done? Like, man, am I going to really mark the top of my best trading year I've ever had? And not in terms of gains, but in terms of consistency, which is more important than gains for me. But yes, my routine was completely broken. And I had to get back into that routine. It goes back to that first question. Would I ever trade micro E-mini futures? I won't say no, because if you asked me in 2016, will you ever trade crypto? I probably would have said no. But I have no reason to look for more things to trade right now. If anything, between crypto and stocks, what more could I possibly want? I've got a 24-hour market and a massive volume and liquidity market with free trades, and I just can't imagine. Maybe once I'm trading less and not doing the everyday kind of thing and taking a step back from the chart guys more, maybe there'll be tax benefits to trading futures that I will shift a little bit. But I don't foresee anything in the short term as far as looking for more markets to be trading. Opinion on changing the color settings on the charts, that doesn't matter. Whatever works for you. Just be consistent. If you got a moving average on there, keep it the same color every time. So you can instantly say, I know that red line is the 12 period moving average. Awesome. Jacob, glad it's helpful. How did I learn to trade oversold bounces so well? Whether there's a specific market that I learned to trade them in or just general experience over time? I don't know. It was not intentional. I did not say I'm going to get really good oversold bounces. It just kind of happened. And it really stood out during the cryptocurrency boom because buying every dip resulted in higher highs. And I can remember just telling my friends who weren't traders, buy when the 5-minute RSI is 30. And it was just so consistent. Just, yep, boom, V-shape, higher highs. And that is when I got really good at oversold bounces, when I was just really aggressively trading the cryptocurrency space. Best mindset to approach a market after a loss: reflect, learn from your mistakes, write them down, step away from the screen, go out into nature or do something that you love that has nothing to do with markets to completely do that first. Blank slate, wipe it clean. I mean, there are times where I'll go into nature and that's where I'll reflect. You know, I'll just sit in the woods and say, okay, I've done it at the beach as well. I just had a flashback of a big loss. Probably the one with the Chinese stock that delisted, and just sitting on the beach and saying, okay. And really for me, it's reflecting on, this is a game of numbers, bigger picture in my life. This is meaningless. Yes, money matters, and yes, money has an impact, but if I stop trading tomorrow, I'll be fine and happy, and I can find other things to do with my life. It's just focusing on the bigger picture and not getting too worked up. You know, if you got a wife that you love or a husband that you love, and you just had a loss, say, well, I get to see Jimmy tonight. And I love Jimmy and I'm so happy for my life, and just focusing on the bigger pictures and not dwelling like, oh man, I just had this loss and what if I lose again tomorrow and what if I can't be a trader? So clear your mind, reflect to not repeat mistakes, and then ensure that you're not repeating those mistakes once you get back into your routine again. Best way to use a stop limit if you can't use a stop loss. So if I have to use a stop limit, just give a ton of wiggle room. You know, you can give 5% of wiggle room, and as long as you're trading something that is liquid, it's going to trigger as a market stop would. If something's illiquid, then it can be a big drop. But if you're trading something liquid, you know, and I put a stop limit, and I put my stop limit 5% under my stop loss, it's just going to trigger as a stop market would. So in crypto, I will often do that. I don't want to get stuck in a flash crash that just V-shapes back, and that was more of a concern in 2017. But I'll just give a ton of wiggle room on a stop limit. I will never be skipped on a stop limit because I'm not trading illiquid instruments, and I give a ton of space. How many hours do I put into trading in a day or a week? I mean, if you're talking morning preparation, trading throughout the day, and end of day video, tomorrow morning I'm going to wake up at 6 o'clock. I'll be on it at 6:05 until a little after 7. So I'll put in an hour and a half pre-market, and then I'll go live streaming from 9 till 10:30. There's another hour and a half, so we're at 3. Then I'll trade from 11 till 4. That's 5, so we're on 8 hours. Then I'll do an hour after the close and market videos, 9 hours. Monday, Tuesday, Wednesday, so there's 27 hours. And then it's less Thursday, Friday. Maybe we'll go 3 hours each of those days, 33 hours. And then I do Saturday, Sunday. I make market videos for ChartGuys members every single weekend day. So maybe we'll put in another 2 hours each of those days. So we're talking 35 to 38 hours a week. And this is me scaled back. I used to do live streaming every single day, market coverage every single day. So I'm scaling back a little bit. Thursday and Friday, I put in a little bit less time than I used to. I mean, anybody that's been following for 4 years, the amount of YouTube videos that I would put out on a weekly basis, I have no idea how I did that. It's because I was living in a shed and I didn't have a girlfriend, and that was my entire life. That's how I did it. So again, when people ask questions about how many years, how long, well, somebody putting in 2 hours after work and someone putting in 8 hours a day, treating it as a full-time learning gig, those are two very different things. So a year to one is not the same as a year to another. Definitely important to be cautious with trading groups. So Dustin says, it's important to get together with other traders, but also feel it's important to be cautious. Seen disasters from trading groups. Here are your red flags right here. Number 1, someone giving calls to other people. Red flag. Number 2, someone not using stop losses. Red flag. Anybody that's been trading for any prolonged period of time uses stop losses. I don't know any trader that doesn't. Because you have to manage your risk to have any kind of consistency. Those are 2 red flags. Red flag number 3, trying to pump illiquid penny stocks or illiquid altcoins. Red flag. Ideally, it's friends. It's people that you connect with, and you're connecting with other things in life, and you gain a trust. We have people in the Chart Guys who were put into small groups that have been interacting with each other, and they're now lifelong friends. And they're going to hang out for the next few decades whenever they can get together, and they talk online all the time. So definitely be cautious, for sure. You don't just join a group and that's it. It takes a while to find the right kind of group or the right kind of other people to associate yourself with. Your goals have to align. If someone just wants to get rich, I used to trade with somebody back in the early penny stock days, and they cared about the money aspect way more than I did. And it was, again, trying to pump the less liquid names and trying to get in a name and then post and tell everybody else about it. And we need to get this hyped up and get everybody on social media talking about it. And it's just, man, I don't care about the money that much. For me, it was the game, the joy of the game and learning the game. And it was just different. I could tell our goals were a little bit less aligned. And that was just that was enough for me to know that this is not my full-time trading partner. I do use mental stop losses sometimes these days. If I'm using a mental stop loss, my market sell order is filled out, and I just have to push a button. And I only do that at this point because I have proven discipline to myself after 11 years. Go back 5 years, I would say, no, Dan, no manual stops, because I had not proven it to myself at that point. And there are times where I freeze up like a deer in the headlights, just like many of you will if you say you're going to put in a stop mentally and you don't. And then it just keeps dropping. And then you just create this rationale. I'll wait for the next 5-minute bounce. And then it starts to bounce and it's getting close to your break even. Okay, I'm just going to wait till break even. And then it's another leg down. And okay, it's even worse now. Well, now I can't sell. Now I'm down twice as much. And you don't develop that until many years of consistency proving to yourself discipline. So I would say hard stops if you're anywhere less than 5 years of trading. My throat's starting to go on me. We're going to do one more. Do I always work out my risk and reward before taking trades? And do I have a minimum risk reward? So I always want at least twice the reward for the risk, for the trade that I'm trying to take. I will always work out my risk on a trade. I won't always work out the reward. And I do need to see how things play out at times. If I'm looking for an hourly oversold bounce, I need to see what the volume looks like for the bulls on that hourly oversold bounce. And have to have the risk aspect. But if I'm scaling in, if I make my first entry, I don't place a stop loss until both of my entries fill, and then my stop loss is based on a dollar amount that I'm willing to risk. So if I don't know exactly where my second entry is going to be yet, then I don't know exactly where my stop loss is going to go yet. But again, this is a trading style that I developed 7 years into the game, and it's just a lot of faster math in my brain on the fly. And that is important. I was good at math growing up. It's memory. I have a good memory. And so, the game in second grade where you have 10 beans and you put a certain number in your hand and you show that hand and you got 4 beans, and then I have to say there's 6 in your other hand. And I was the best in my class at that game because I was able to do those kind of calculations fast. Get to college, calculus, I don't care about calculus at all. I don't like any of that bigger picture math, but simple adding and subtracting and multiplication in my brain. It's something I'm good at, and that definitely benefits me as a trader as far as just speeding up the process of knowing what my risk and reward is in my brain fairly quickly. And that also comes with comfort of trading the same ticker. I know I've been doing math in my head of a certain number of shares of Tesla for a year and a half at this point. And that is very easy for me to calculate what this number of shares in Tesla is and how many dollars of a drop would get to my day loser level. And that is part of the familiarizing of playing the same names. You get to know a ticker. And I use it's like dating. When I'm trading a new ticker and I'm live streaming and talking to people about it, I say, I'm on a new date and I have to be cautious and I have to be observant and I have to watch how it trades and get comfortable with it. And that is an aspect. The math in your head becomes easier when you're doing it for the same ticker over and over again. Hard time taking profits, partial positions. Partial positions. If I can take enough profit to place a break-even stop loss under the support level that we just bounced from on an oversold bounce trade, then I am in the complete control of that trade. And I can let it play out. I can close the computer. I have a hard time with longer term trade game plans because with the chart guys, I'm always on the computer. And otherwise, if I weren't, I would enter a trade, I would set my break-even stop, I would close the computer and let a 4-hour bounce play out. And for me, sitting at the computer will lead to me taking profits early, often. Staring at the profit I have on a trade will lead to me taking profit too early. So setting a stop and closing the computer and going in to do something else and come back in a few hours is very powerful. All right, I'm done. I appreciate you all watching. Don't forget to do good things. I'll post a link to the other Q&A that was similar. It actually has a decent number of views, so people seem to like that one as well. And I appreciate all your support throughout the years. I'm just blown away by how many people at this point are like, I've been watching you for 4 years, 5 years, and that to me is just awesome. So thanks for the support. That is definitely a motivating factor at this point. Whenever there's motivation that's low, if someone sends me a little paragraph message, that's my motivation for the week to keep at it. So appreciate you all a lot. Do good things. Have a good Sunday. Get a good sleep routine. Use stop losses on every trade. Patience, it's a marathon. We're in this game for decades.